Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with an income idea. But before we talk about anything else, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. Today's income pick, Frontline Ltd, traded on New York Stock Exchange under symbol FRO, is firing on all cylinders. And thanks to unprecedented industry tailwinds, the company CEO has said that the future of the crude oil tanker market is almost too good to be true. This company just reported its strongest profitability in 15 years, providing strong guidance, raised its quarterly dividend again, and its stock is trading at highest level in more than a decade. Thanks to record demand for crude, the outlook for Frontline stock remains robust, with analysts providing 12 months share price target up to $34, its highest trading range since 2011. John?
Yeah, thanks, Mo. For readers of incomeinvestors.com, Frontline stock is actually up 20% since we last looked at it in June, and its dividend has jumped 14% quarter over quarter and a whopping 433% year over year to 80 cents per share. And as you noted previously, record demand should help crude shipping companies like Frontline continue to deliver pretty strong results over the coming quarters and years. Case in point, this past June, I saw a surge in oil demand reaching a record high of 103 million barrels per day. The figure exceeded the pre-pandemic record of 102.4 million barrels per day, which was set in August 2019. Meanwhile, the international energy industry predicts oil demand could hit a new record in August of up to 103.6 million barrels per day. And going forward in 2024, oil consumption is expected to remain near record levels at around 1 million barrels per day. Now, record demand comes at a time when the global oil supply dipped by 910,000 barrels per day in July, totaling 100.9 million barrels per day.
So, John, what can you tell us about Frontline Limited?
Yeah, Frontline is a shipping company that owns one of the largest and most modern fleets in the industry. It ships crude oil and oil products in the Arabia Gulf, North Sea, West Africa, and Caribbean. The company's fleet includes 22 VLCCs, which stands for Very Large Crude Carrier, and they're capable of carrying around 2 million barrels of oil. They also own 25 Suezmax ships. They're specifically designed to move through the Suez Canal. They can carry more than 1 million barrels of crude each. They also own 18 Aframax vessels. They're capable of carrying up to 600,000 barrels of crude oil. And again, as you were noting, thanks to industry tailwinds, Frontline's fleet is in strong demand and is expected to be for years to come.
Now let's talk about numbers here. How did this company do in the last quarter?
Well, in the second quarter of 2023, it reported net income of $230.7 million or $1.04 per share. That's its highest quarterly net income since 2008, and that's up significantly from second quarter 2022 net income of $51.2 million or 25 cents per share. Reported adjusted earnings of $210 million or 94 cents per share. That's up from $46.2 million or 25 per share in the same period last year. In the second quarter, the spot time charter equivalent or TCE rates for the company's VCLLs were up pretty significantly, 290% at $64,000 per day. Second quarter spot TCE rates for Suez tankers were up 132% at $61,700 per day. And daily TCEs for Aframax climbed 37% to $52,900. And that bullish trend is expected to continue. Spot estimates for VLCCs in the third quarter, which are so far contracted 74% of vessels, is 53,200. 48,000 for Suezmax tankers, and daily TCE rates for Aframax are 40,500.
So this company is, showing some strong profits, and as I mentioned earlier as well, it's highest in decades. What's happening to dividends here now?
Well, in the second quarter, it declared a dividend of 80 cents per share, or $2.80 on an annual basis, for a yield of 15.72%. The dividend will be paid out around September 29th, 2023 to holders on record of September 13th, 2023. That 80 cents per share payout is up 14% over the 70 cents per share paid out in the previous quarter, and it's up 433% over the 15 cents paid out in the second quarter of last year. Now, Frontline's goal, it says, is to distribute quarterly dividends equal to or close to earnings per share, adjusted for non-recurring items. Now, not surprisingly, as expected, it suspended its dividend during the pandemic. Suffice it to say, money was tight. Many oil and gas companies drafting super tankers to just store the glut of crude oil that was flooding the market. It was essentially less expensive than selling oil at huge loss. In the third quarter of 2021, Frontline announced that It reported spot TCE rates for its vessels were well below the daily break-even rates. Things eventually turned around, though, and in the second quarter of 2022, it reinstated its quarterly dividend at 15 cents per share. Because of industry dynamics, the company's dividend will, of course, fluctuate based on supply and demand. Case in point, in the third quarter of last year, it paid a dividend of 30 cents per share, and in the fourth quarter, it paid a dividend of 77 cents per share. So you just need to pay attention to industry dynamics, the company's press releases, and you can sort of get a hint for where things are going.
And John, finally, let's talk a little bit about what's happening to FRO share price. I was looking at the chart and it's impressive.
Well, yeah, just like Frontline's dividend, Frontline stock has also rebounded from the pandemic. It's actually trading at its highest level since around 2011. The Frontline stock is up more than 250% over its pre-pandemic levels and up roughly 140% since we profiled Frontline way back in March 2021. It's also up 20% since we looked at it this past June. More recently, Frontline stock is still thumping the broader market, up 16% over the last month, 60% year to date, and 66% year over year. Now, those are pretty major gains no matter how you slice it, but Wall Street analysts expect Frontline stock to make even bigger moves over the coming quarters. Of those analysts providing a 12-month share price forecast, the median target is $22.43 per share and the high estimate of 34 cents per share. Yeah, those are big gains no matter how you slice it, but Wall Street analysts expect Frontline stock to make even bigger moves over the coming quarters. Of those analysts providing a 12-month share price forecast, the median target is $22.43 per share with a high estimate of $34 per share.
John, thank you so much for your analysis. Just to recap a little bit, our opinion on Frontline hasn't changed since June. It's firing on all cylinders and it's throwing lots of cash. TCE rates are up, its fleet continues to be in strong demand, its share prices are ripping higher, and it's just hiked its dividend to 80 cents per share in the most recent quarter. The future remains excellent, with even management saying that the future is almost too good to be true. We'll be back with another income pick soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.